Check, check, quick sound check. Can everybody hear us loud and clear? What's going on, Coach Paul?
Oh, we can hear you loud and clear, Coach Jay, on this funky day. In the equities, at least.
What a day. The government is shut down. The equities are all up, making all-time highs. And like we were talking about yesterday, right? Government shutdowns sound scary, but we're traders here. And markets are going to present opportunities, and they definitely presented opportunity today. Hopefully, everybody had a good day. Welcome to At the Buzzer, our market recap. If this is your first time here, the goal of this session is to review what happened in the markets for the day. We may talk about some markets that you have not traded before, but we believe our goal as traders is to identify opportunity. We want to see how we can take advantage of those opportunities while managing our risk. If this is our first time meeting, I'm Coach Jay, the Topstep Performance Coach since June 2023, and that is Coach Paul. Coach Paul, go ahead and introduce
Hey, I'm Coach Paul. I've been with Topstep since April of 2023. I've been involved in the futures trading industry for 4 decades. I'm here to share some of my experience, some knowledge, and hopefully help you become a better trader.
Awesome stuff. Thank you for that, Coach Paul. We got Coach Hoop in the chat helping us moderate this session. So if you do have any questions, make sure you post them in the chat. Coach Hoop is going to send them over to us. Like he said, smash that like button. Let us know how you did. You all, our chat, our audience, we thank you for being here as always. Let us know how you did today. Were you up on the day, down on the day, anything from today, or what markets you traded? And we will take a look. So big news, of course, is the government shutdown. Whether we want to call that planned or unplanned, that is news. Government shutdown at 12:01 Eastern time this morning. Sounds like the discrepancy is with Medicare costs and healthcare costs, trying to come to a resolution there. The last government shutdown we had was 35 days long, where we saw the S&P rally 10.3%. Today is day one. We'll see how long this one lasts before they come to an agreement. But with that being said, some of the planned data that we have coming out later in the week, especially the data from the BLS, jobs data supposed to be coming out this week. If we don't get a resolution, then we may not get those numbers. Other planned numbers, we did get an ADP number. ADP is a private company, so we did get the ADP job data. Came in at negative 32,000. Forecast was positive 50.5 thousand. If we remember, that ADP number was the accurate number when the BLS data was off. So seeing a slowdown in the labor market from ADP when they expected a 50,000 job increase. Anything else you got on the news, Coach Paul?
Well, the news front, with this government shutdown and the numbers, how long does this go on? Like you said, what if it goes on forever? I don't, this one could get ugly, but key point, and we talked about this yesterday, whatever that news was, you have to read the market and not try to predict what should happen. With that news, the first instinct was, well, the government's shutting down, the economy is going to go to hell and get short. I think they thought that in Europe, and we'll go over that later, but that ADP number is probably what was sent this market higher. Bad news is good news scenario, but we'll see. But once again, the lesson is whatever the news is, be aware of it, but don't make your trading decisions based on the headline. Read the market. And today was a classic example of that.
Absolutely. All right. Let's take a look at the quote board. There are 36 different markets we can trade with Topstep accounts today to the downside. Energies, heating oil down 0.9%, RBOB gasoline futures down 1.64%, and Lean hogs. Excuse me, chat. I think I'm coming down with a cold. Lean hogs down 2.17%. To the upside, we have micro Bitcoin futures up 2.54%, micro Ethereum up 3.97%, and natural gas up 4.69% for our biggest percentage mover to the upside. To talk about our big four, we had crude oil down 0.83%, S&P making a new all-time high, up 0.27%. Gold also making a new all-time high, up 0.38%. And the NASDAQ also making a new all-time high, up 0.41% on the day. I have a NASDAQ chart up here, Coach Paul. Take these executions off so we can actually see the charts. But here we go. We got a daily chart on the NASDAQ, Coach Paul. What are we seeing here?
A bullish chart. When we talked yesterday, I have to buy the dip. It's still buy the dip. Did we hit the all-time high by a tick or two today?
We did take it out. The prior all-time high was 25,027 and a quarter. New all-time high 25,036.75.
Yeah. What's that mean? It's almost rinse and repeat. We'll see how much we can rally tomorrow, or if we get another little buy the dip. But very positive chart once again, lingering at all-time highs. Had a chance with last night's action to get an engulfing candle. If we just looked, but we won't have to do it. But that wick, most of that came last night.
Yes, it did. Yeah, London looked like they were going to sell us off.
Yeah, but we didn't get it. So buying the dip is still there. So on a flow basis, trend basis, there's nothing here that's challenged the upward trend. Anything else you see in that?
Nope. It is continuing to push to the upside. We didn't even get a pullback to the 20 moving average on the daily. Just a really strong market. Really strong market. Nothing can really shake it. All-time high close if we close above 25,000 here. And where's the next level is the question. 25,000 is not going to be an easy level to just hold above. We do need to convince some buyers here, but I think we do a job of doing. Let's take a look at the half an hour. What is that white line? That white line. Man, that 200 moving average. We talk about it often. And the pattern that we saw today, we just one of the things we've been kind of identifying, Coach Paul, as a signal is when price trades above or below a level and volume doesn't go with it. That says a lot. Now, in this case, we had VWAP from the Globex Open. It stopped. Volume stopped at that 200 moving average. Price traded below it. And in the London session, we had a right before London Open, actually, we had a pretty strong sell here, almost 120 points to the downside. And this was a pretty nice J trade here. We close above the high, right at Coach Paul's 200 moving average. Volume for the day never crossed below that 200 moving average. It stayed flat at it. And then we just turned around for a really nice reversal, really nice two-sided trade today. And if you came in to the day, yesterday saying, oh, government shutdown is bad for the markets, you had a pretty nice trade. And then the market said, we don't care. Went the other way. So you got a pretty nice long there as well. What are you seeing here on this 30-minute chart, Coach Paul? This action here,
great opportunities last night.
for sure.
I don't know. I've heard you talk. I've been waking up London time. I guess you could use the song London's Calling, and saw that. And I went back to sleep. And it was interesting is that was a big volume for a night half-hour bar. So whatever the news was because the shutdown, or it's the end of it's the the end of the world. It didn't come to fruition, but we had some urgency selling last night.
Yeah, we did.
And it was so the initial reaction was very bearish, and it's today's range in the NASDAQ was 403 points.
Huge range.
And
About 150 points more than the average.
so it hit my second level 2 support at 24,655 at night. Most of that happened in one candle. But let's look at a 3-minute. What happened at that time last night?
Jekyll, to answer Jekyll's question, yes, this did set up the J trade. And we talked about this during the opening call with Hogue, that this 30-minute candle, and maybe you could even look at a more zoomed in time frame like we're about to do with this 3-minute. That 3-minute candle didn't end up being the low of the day, but once we closed above it, then yeah, I mean, to me, I'm considering that as, hey, that sets the action for the day. There's that 3-minute candle there, Coach Paul.
Yeah. And that volume, well, we had some follow through. It was lesser volume. But that set up the J trade on the 30-minute. It was interesting if we do a volume profile from the opening to that low. All right, let's now look at the volume point of control and start moving it forward. Right there. Look what happened there. That's that volume point of control switched from up high to low, which to me gives credence to that. Look at the price. That the volume point of control was the low of that big candle, which held the rest of the day. I mean, the selling was done. Knowing that coming into the opening today, and going back to the half hour, putting the 200 moving average, and look where we opened this morning. So now we know that volume point of control in the 3-minute was it was done. Now we have a J trade coming into the opening. Just reading that, what bias is the market giving us?
Stepping in. And that it's been the case, right? Buy the dip has been the theme, and this is no different.
Yeah, and that really set the day up. So even that we had that 400-point range, how much? 200 of it came in one candle.
This was a 120.
This 120.
Candle talking about?
Yeah, that candle.
Yeah, this one was about 120.
120
points, 30-minute candle. This one, which was half hour into the session, another 140 points.
So, I mean, now we can break it to the opening range in New York. Let's see what happened. Because mark out that 200 moving average, the white line. By the way, you've had me turn my green line to a white line now.
Yeah, it is. It's such an important level. Such an important level, man. We see the market respond to it. We talked about this yesterday, right? DeCaro was asking questions yesterday in the chat. How do you trade this? And a bunch of traders asked, how do you execute on this? I'll pull up my executions again for this account. And I want to show you guys that I'm not buying it down here, right? I wish I could. I wish I did. I wish I was awake at that time. I think I had actually just gone to sleep. So I was going to miss that, but doesn't mean that there is an opportunity. And once we clear above that 200 moving average, clear above that high volume on the New York session open, we talk a lot about being patient, waiting for the trades to play out. In this case, we got a satisfied pullback, Coach Paul, and this was just a setup for a J trade. When that opening volume didn't sustain lower than that 200 moving average, I got in quote unquote late here, and I expected it to be somewhat of a range day. So I was out a couple minutes in, but I think when you have a lot of people, and we Coach Paul, you and I talk about this a lot. A lot of people say don't trade the open, and maybe for good reason. But when the market presents opportunity at a great price, sometimes you just have to go ahead and click the button, um, and accept the risk. And in this case, I think that's exactly what that was. And I did take profits because look at it. If I didn't take profits, I would have had a trade that did stop me out at some point. But being very quick about this, uh, maybe not seeing the volume sustain to continue to push us right away off the open. And Chauncey has a question: how do you determine whether or not it's going to be a trend day or a range day within the first half an hour? There were some signs in this trade that told me that it had the potential to be a range day. Uh, and that sign is we have price leaving the range, right? I already identified that this had the potential on a higher time frame. Let's go back to the 30-minute chart. Uh, this candle right here. I was assuming that that had the potential to be the range for the day, right? So let me clear some of this up. This area at the low and this area at the high had the potential to be the range. So if I get 40 points at the high of that range, I do have to take the trade off because this volume, Coach Paul, never left the range.
Volume never left the range, and it had the chance. And I agree at the beginning of the day, if we don't see this output, we have to look for it, bar to bar or candle to candle. But you know what's interesting there is we had heavy selling. It went from to new lows. It was like, but with VWAP went up, came down on that, and then we had the J trade. That right there tells me we were, by the way, one of the things, we were in the hole. We were lower. We were still like 100 lower.
Yes, we were. And then we had a really strong rally. So there's a question here from Scott. Psychologically, did you get irritated that price went up so much without you? Uh, I didn't, Scott. So this account that I took this trade in, it's been kind of back and forth. I've been taking some hits, taking some winning days, some losing days. It's been an account that's open. It's an XFA that's been open for about a month. Had a green September, but could have had a better September if I managed trades better. And part of that was, there were some days where I had P&L highs that I continued to try to trade and give some back. So for this account specifically, I was happy with the profits. Made $1,300 in about 6 minutes, and I'm gonna go ahead and lock it up. I actually, as soon as the trade closed, I just hit the lockout button and just locked it for the day. Um, I have two XFAs that I'm trading. Um, the other one, I had a gold trade last night. Similar story. We'll talk about it, but I didn't maximize that gold trade. $600. I just locked it out. This continued price action. Um, I also do have a personal account that I can trade, and I took some trades over there, right? But I do have to look at this account as I want to manage it a certain way, and I left it. Now, do I want to? Is there a part of me that says, could have bought at 780s and had a 200-point trade? 100%. But I didn't measure for that. I did not expect this to happen. So, you know, either I need to measure better or just accept what I accept maximizing what I measured at the time. And from my entry, I think I measured about 60 points and I took 40. So the way I look at it is I took 60%, 66% of what I measured for. I can't be upset about that. If I measured for 200 and only took 40, then we have a different conversation. But it's a great
Oh,
question though.
great point there. If you when you predetermine your risk and measure it and accept it, that's the trade you take.
Right.
So that's the because you define the risk you're willing to take. If it was to get 200 and you only took 40, well, it's a winning trade, but not a good trade or a good decision
Yeah.
because you won't last. Because if you're playing for those moves, you're going to lose a lot more than you're going to win. And if you miss that, you're fucked.
If I
So
measured for 200 here, I have to take at
what-
least, I think 60%, Coach Paul.
yeah, if you measure, I will tell you this: if that's part of your plan and your edge,
Right.
you got to take at least 190
At least.
because you don't get that all the time.
No.
But you can make money doing that because if you're running I do that in a swing trade, it loses 80% of the time. But it eats like an elephant and shits like a bird. Um, if that's what you're measuring for, then you're good. If you're not, and you veer from your edge, your trading plan, that's a problem. So I love what you said. That's what you measured for, and you can't go, well, oh man, if I just hold on longer, because that decision needs to be made before you enter the trade.
And there's a reasonable reason to measure for that 200 points today. Somebody could justifiably say, "Hey, we're gonna go take out the all-time high, Nasdaq." But if you measure for that and you don't experience most of the trade, I did not expect that today. I'll be honest. I don't know what I expected. I expected more range, but the market disagreed. So, got to take what we get. Anything else you got on the Nasdaq, Coach Paul?
No, um,
Uh,
onward and upward.
Onward and upward. Let's take a look at the S&P really quick. Same story over here. Let's take a look at the daily. What are you seeing here, Coach Paul?
Did we close at all-time highs? I think so.
Yes, we did. Yep.
So we should get more all-time highs. Um, Government shutdown be damned. Um, it's a very bullish looking chart. There's unless something dramatic happens, we're going higher. Same trade. I mean, it's just
Same
about.
trade.
I
Same
mean,
exact trade.
um, it was even more to me. See now the 200. It closed under there, but when the opening came, we were
Of it already.
we
Yep.
were well above it versus Nasdaq.
Yeah. Nasdaq did still have to test it. The S&P back above that 6,700 level. We were good to go.
Yeah.
The one thing I
Um,
want to point out, and we talked about this yesterday, government shutdown, any news that comes out, we still have to have a process for trading. If I look at this day a year from now and I'm back testing to see how I can take trades around the 200 moving average, I have no idea that this day was the government shutdown. None. Right? And most of our back testing, unless you're specifically back testing for news candles or something like that, how many people are saying, "Oh yeah, this is the day that Powell was at a unplanned press conference. He bumped into a microphone and said something." We don't know that, right? So at the end of the day, I think we have to have that repeatable process, regardless of what the market's going to present. Because you still got to click the button. You got to have a reason to click the buy or sell button, and it be a measured reason. So you know, uh, there was a question from Mo that says the rally today, would you classify it as a relief rally after the government shutdown news finally crystallized? Market loves certainty regardless of the news. How would you classify that, Coach Paul? Is that a relief rally because we finally know what's happening? Government shutdown.
Um, well, it's interesting. I don't know. Here's what I don't know, and that's my ethos. I just trade what's in front of me. Now, if I go outside of the why it rallied, well, yesterday we did hit an all-time high.
Right.
So we kind of broke on uncertainty how the market would react, I believe. Or this could have been just a regular swing. Um,
Beginning of the month too. First day of the quarter. Capital
yeah,
right allocation.
you got yeah. I mean that's another great point. Allocation. First day of the month. Um, I don't. I'm sure there might have been some news out of Asia or Europe that we're not even paying attention to that would have that break. I don't know. I was just like I said, I was asleep. But the reason was, and I'm not being coy here, we had bad selling early.
We did. Yeah, we did.
So, and because that wasn't light volume.
No, they did try to sell it. Did
I
try to sell it.
mean, there's nothing better for a rally than bad selling.
Yep. It happened across the board. So, even in the Dow, I believe
Yeah.
made no Dow did not make all-time highs, but across the board, the Dow, the Russell, we saw it in all of them. And once we closed above that bad selling, that was it.
It'd be interesting to see is the gold at that time. I think that did it make its high in the night?
I
No,
believe
that
it
was
did. Yeah, I believe it did. Right after that, about an hour after that. Let's
all
take a
right.
look at gold on the daily. Made a new all-time high today as well, Coach Paul. 39.2270, new all-time high in the gold futures. Emery says, describe bad selling another way. Yeah,
Well,
go ahead.
there's an old saying: "He who sells what isn't his'n buys it back or goes to prison." And that's from Reminiscences of a Stock Operator. If you haven't read that book, I highly recommend reading that. But bad selling, we saw that last night. High volume, making new lows. That has no continuation. And we had it on the half hour. So even there, it doesn't sustain, it can't sustain that volume. And once it gets over it, closes, not trades, closes over it, it's confirmed. That's bad selling. Whether that was selling stops. Yeah, that could be with that volume. I wouldn't consider it stops because stops are usually not big volume. It's a great question. That looks like there was selling, there was an entity that sold.
Yep. I'm trying to pull up. I'm trying to pull up Quantower here to see the delta on that. But Coach Paul, you said it perfectly, right? They sold and just got no continuation. When we did the 150K subscriber thing, the class I did on volume, we said that, right? There's 3 questions I asked myself: who's in control? What are they getting for it? And is it sustainable? And this volume at that time of day just was not sustainable. Uh, you know, that was that candle, that 3-minute candle was almost 10 times the average. And look at everything else around it. They would have had to do a lot to continue that. And, we got 60 points, 70 points in a 3-minute period on 10 times the average volume. That is hard to sustain. And it just stopped.
It stopped. And here's another, but since we don't know what entity, maybe that was some entity that said this government shut down. Sell. Let's see
Right.
what's there. I mean, if it's a big enough entity, let's go see how it reacts. And then they found out what they covered up. Maybe they're just going to start buying it back and getting long. I don't know, but here's the technical reason is, and thanks to the question, Anne Marie, is that defines that's bad selling. It didn't get, and that's what is a classic J trade. There is no continuation. The sellers are depleted. So it's
3 minute candle in the S&P was 7,000 contracts traded in a 3-minute period, negative 1,100 delta. So again, sellers did try it, and then this candle right after it was negative 454. But then if you ask yourself, right, that same question, who's in control? Sellers were definitely in control for the moment. What did they get for it, and is it sustainable? At some point, they stopped getting anything for selling it, and like Coach Paul just said, right, if you sell something and it isn't yours, you got to buy it back. And
especially in size. I don't.
right, yeah, and then where do you buy it back? Above the high of where you started selling. You may feel okay, right? All through this consolidation, oh, it's okay. You know, price is still in my favor, especially if I sold it right at 6,700. Once price starts getting to 6,701, 6,705, then you're like, oh shit, I have to get out of this. And if depending on how many people sold down here, that door to get out might the line to get out could be a long one.
Who knows? But and it's funny. But we see the data that comes after it.
Yep.
I mean, even it's something to watch, and that's one of the things. Working with Coach Jay for how many years now? We're almost 2.5 years.
Yeah,
almost 3 years. But he knows volume. Like I said, in being able to bring that, one of the things that was the volume analysis has been around a long time, but it hasn't been available. But it's only been last 20 years where volume is instant, knowing it. Like I said, on the trading floor, you literally be audible volume. So in that situation, you'd hear this roar because everybody says that they're selling. There's a big seller going, and so there's a lot of actions, and there's a lot of vocal screaming and yelling, and all of a sudden, I know this one. All of a sudden, it just gets quiet, like the calm before the storm, or the middle of the hurricane. It's just like it gets really quiet, and I noticed that after a while. I'm like, wow, it got really. Every time it gets quiet, it goes the other way. Here, yeah, because the seller stopped. That whatever that was, that's big seller drove it, stopped selling it, and now it would have to have some other large, like I said, well, that's a huge volume. I'd like to see what percentage that is in night volume in that time frame, because that's an outlier.
Yeah, for sure.
That's a lot of contracts. So when that selling stops, you'd have to have some kind of the same type of selling for continuation. And we don't. So once we close above it, it's worth taking the long.
Here's a question, and we're going to go over to gold in a second here. Courtney asked, was there spoof yelling, like fake orders? What would happen? Like if somebody, you see how we see on the order books now, somebody like can put out a 500 lot on the offer at a price. Well, I guess they could, right? Because if you're not at the market, or you're not the next offer up, you'd say you're selling at any price and always pull it.
Okay. Story time.
All right, here we go.
There were rules to that.
Okay.
So if you had size, you put both hands up.
Okay.
If you didn't have size, you have to say, I'm bid for 5. I mean, there was a structure there. And believe me, it was enforced by bigger traders. But if you didn't put a number on it, you said 7 bid, and you didn't put a number on it,
you getting
someone
everything?
can hit you with any size.
Yeah.
Now,
And 7 bid is the price, right? So I would go 7 bid for 100, right? That means I want 100 at 7.
put it. So now, when we do it, you can't enter an order unless you can get hit. Now, I don't want to go into all the theories of how they don't get hit, and it used to be a thing. But here's what happened. There was a local. It was in the spreads, in the treasury spreads. It was a local who used to love to go 7 bid for 5,000 and see if he could get a reaction from nervous traders. Oh yeah, he would do. And these are spreads.
Okay,
so
got you.
Anyway, he tried to get where someone would just jump and give him a couple hundred, being like nervous.
Okay.
And he would do this, and he was known for doing this. And I think J.P. Morgan gave their desk a resting order. He does that again. You hit him.
Okay.
For whatever size, and he did it. And he got caught. And then everybody knew it. He couldn't just say, no, I was just kidding. You can't, no, it's sold, because you would have to go. I mean, he couldn't back out. It cost him, I think, $150,000. Then he had to get out to the pit, to the paper, because the locals weren't going to let him out. He got trapped. Yeah, there was. I mean, there's more stories like that. There was some talk today with Hogue.
Okay.
You know, on the other side of it is, you try and get you call buying a tick. So you're near new lows, right? And locals, like, it's trading 7, 8. At the low of the day is 7, and it's trading 7, and you sell someone at 6. And if you could get the print, the 6 print, that goes out. It's called buying. Then the paper might have stops, and you might even get a big stop, like someone's got to sell 500. And then you look to cascade the selling. So it's kind of the opposite of what you saw exhausted selling. It's more price discovery. Someone at 6, 1. Remember, I said 1. I didn't say sell 500. So if it's almost like popping a bubble, you take the pin. Oh wow, explosion! It doesn't cost me much. But yeah, that spoofing.
Yeah.
It was prevalent 10 years ago.
Okay.
I'm sure it's not as prevalent today. It catches up. I mean, to do that, you have to have an advantage in your speed, and the bigger players have what are they running against? The speed of light. I mean, so there's trades we don't even see at our level. So to do that, it's not. I don't know if it's worth it. But you know what? If you follow a trading plan and you don't overtrade, it's not going to affect you. Those bigger spoofers, I'm sure some of them got nailed, like this guy I was just talking about. And if you spoof at a big volume in some big beast like J.P. Morgan or Goldman nails you, you probably don't want to do, for all the time you got away with it, you can give it all back real quick. I don't think it happens nearly as much as personally as it used to. But I'm not privileged to that. And you know what? It doesn't affect me.
Take a look at great story time, by the way, Coach Paul. Chat loves story time. Oh, so do I. Take a look at gold here. Gold made new all-time highs last night and then pulled back, kind of settled below this 3,900. What are we seeing on gold on the daily? We saw it kind of a maybe a little inverted hammer candle there. It's probably called something else. Uh, I did not read the chart pattern almanac, but 39.2270 we rejected at the high. Um, what are you seeing here in gold, Coach Paul?
You know what that also would be called on a profile? Balance, a fat profile,
Mhm.
where most of the prices, just prices, happened at in the middle. Now, with that said, we made contract highs. They stopped buying. Um, uh, there's nothing in the chart that says we're even that we made the high. It could happen. Maybe they find a cure for gold, and we open 500 lower. I guess that could happen, but still, this was bought today. Even the heavy selling there didn't make new lows. Um, I think just got exhausted. We came a long way yesterday. Um, and actually, the range was pretty big, decent. You look at that. What was the, let me look at my range.
High to low range, we got 42 points, $42.
42. The average true range is 52. Um,
Average true range on the daily at 52.
52. So, I mean, it's just kind of a regular day. There was, it was interesting, whatever happened at that time frame with stocks and gold, it all happened around the same time and it stopped. So my initial guess is it was a result of government shutdown was for reals.
Yep.
Um, and then it didn't follow through. But did we have a JH buying? Yeah, we did.
On the 30-minute, we did, yeah. So we had highest volume 30-minute candle up here at the highs. Uh, if we attach VWAP to that, VWAP never leaves the range to the upside. Price doesn't either. And then it turns around. It wasn't super dramatic. I tried to look to see whether or not it was on a shorter time frame chart as well. It wasn't. Like you said though, Coach Paul, they just stopped buying it, right? We got extended from VWAP. It took a little longer, right? Some of these trades where they turn really quick is because we have this huge spike of volume, similar to what we had in the equities, right? But in this case, it wasn't that. It was just at some point that buying, whatever volume they tried to do up here, just could not move price higher. I don't know if there was an active or there was a passive seller up here, what it was, but we can see that VWAP stayed pretty flat and in the lower extreme of prices. But at some point, buyers just did not step in, and then what happens? Bad buyers become great sellers, bring us right back down to where we came from. Um, so nice two-sided trade today in gold. I know the house account took a gold opening range short today. I actually don't know how that trade ended up playing out. I hated
They
the trade when we came.
covered it for 100.
Okay, got you covered it for $100. I did not like that trade when we got into it, but this is the perfect example of the market doesn't care what you like or what you don't like. It's going to do whatever it wants to do. And in this case, we did have a pretty strong case for uh, a little bit of a sell-off. We had Hoag's weekly kickoff level, as a target down here. Shout out to Hoag, 38.86. It was that weekly kickoff low, and that was the target we were looking for. And again, not a coincidence that we see all this volume at yesterday's value area high and Hoag's weekly kickoff level. Uh, interesting, interesting stuff there. Anything else you got on gold?
No, well, buy the dip.
Buy the dips. We'll see what happens at 3,900s now. We traded above it, couldn't sustain price above it, but with all of the fundamental investment that we hear coming into gold, I do not think that this move is over. think you probably say the same, Coach Paul. John has a question. How do you calculate the average range for a session? Real easy. So the indicator that you see bottom of my screen here, probably blocking the number. So let me right over my
Yeah, the
right over
other
my
way.
right shoulder right there. So that is the ATR. And I put it on the daily chart and it shows us there, right? So that ATR value will change. Sometimes it increases, sometimes it decreases. Right now, the daily ATR in gold is 52 points. Um, and that ATR is going to adjust based on the time frame that you're looking at the chart. So if I want to know, like Coach Paul says, use 2 ATRs as your stop based on the time frame that you take the trade. Let's say I take a trade on a 5-minute chart in gold. The ATR in the middle of the day was 6 points. So Coach Paul's suggestion would be take that ATR value, multiply it by 2, and that's your stop. So a $12 stop in gold. Yep. ATR indicator. It's a great tool. It's on the bottom of my charts because I don't really care about the line. I usually just look for the value. When I'm placing a trade, I usually go just quick math, whatever that number is, times 2 for my stop. And then on the daily chart, just measuring how much range potential we have based on the past couple of days. Uh, Anything else you got on gold, Coach Paul?
Yeah, last one is for average range, the average true range, there's a little difference. It's negligible. Um,
There we go. Balaji has a
Nothing.
question. Go ahead, Coach Paul.
Mhm. No, I have nothing else on gold.
Awesome, thanks. Balaji has a question here. Now that things are at all-time highs, how do we chart it since there's no data to the left? There's a ton of data to the left that you can still look at. You can use measured moves, right? So let's say, for example, I'm looking at something like this, right? When we get a little bit of a pullback, I take this move, I multiply it off that pullback, right? That'd be the next measured move to the upside. That puts us right at 4,000. So I could do something like this. We could see Balaji where we open up tomorrow in gold. Let's say we open up at, I could use that ATR value, right? Let's say we open up, at 38.92, right where we are right now, and we don't see any selling at all. Let's say 38.92 is the low for the day. I could take that ATR value and say it's 52 points. What is 52 points from that low? 39.47. That could be the potential range high for the day unless we see an expansion day, right? Let's say we open up at 38.95. 38.95. Say we open here. We see the market trade 20 points lower first. And then by the time I come in for the New York session, we're back at 38.95. What I would say is that there's already 20 points of the range that we use to the downside. So then I would go from that low, 52 points up. What is the potential for a daily ATR move? 39.1870. So you can use prior information, you can use measured moves. Coach Paul, how do you chart charts that are at all-time highs?
Okay, one of the things is the trend. Valuable. There's trend lines, so let's look from the lows we had from August. Okay, now there's a great trend line, and then we can duplicate that and create a oh man, I lost the word for it.
Channel?
Um,
Channel?
Either way, yeah, and we're in that.
Yeah, we are.
That's the one I just see it. Another one to use is Fibonacci. So we had a correction from, God, it looks so small now. Where we had a correction from May, the all-time high, and then we down to the correction low. All right, and now we can do a fib on that. 100. Let's start. Yes. So take from that low. Let's do the biggest fib projection. Yeah, put them all. Yeah. So that's another way. I mean, we with that, like I said, you could get to 5,000 in this just using the fibs. So there's different way. Yeah. And so that past data in many different perspectives, and we just used what four different perspectives.
Yep.
Another way to look at it. Now, with that also said, and we're up towards the top of that channel. And we stopped. So I didn't keep that channel up there. I really like that channel.
Can you show how to use a trend-based fib? I could, but I'd be making it up.
All right. Well, here's you just did. That's a trend. Now,
I think what he's
all
saying
right,
is
let's use
this thing
you
here.
have to take major lows. So go back. We'll get rid of this fib. No fibs. And let's look at the major low.
Go ahead. I'm following you.
All right, to there. All right.
You bring it back to the low, right?
And there's the projection. So one of them for next level of resistance, according to this, a fib, is whatever that purple line is.
This blue one up here, 41.35.
41.35. And
Yep.
then if we make that a little smaller, we can see the next level, which I think is 5,000.
Yep. And Jen and John, I get you. We're here to learn. But I'm not here to teach things that I don't know how to use.
I've used them, so
Yeah.
that's
Oh, there
one
you
way
go.
to look
Thank you,
at
Coach
them.
Paul.
And you can use that on a smaller time frame also. I mean, this is a daily. But when I think trend, I think daily. Now we can get a half hour. Let's do a half hour chart. Get rid of all that. Now let's find the lowest low of the last month. All right.
Month's low.
Yeah. Now let's
This low is right
for
here.
a trend. For a trend to continue, let's say we use that one. Let's bring it to today's high. For a trend to continue, it should keep 50%. Or 62.5. So at 50% on this half hour, you'd mark that out, and the biggest one I can is 62.5. So all the way up, if we use that every time we get a major high, it probably comes back to 50%. We've seen this many times, Coach.
Yes, we have.
So right now, from that move, that 50% is really important to keep a trend.
Yo.
All right.
But I just learned here.
Yeah. So remember, if you're doing trend analysis, in your time frame, you have to find the lowest low and the highest high. If it's an uptrend, you find that lowest low and get it to start with a trend line.
I'm trying to pull up crude oil here. Like we might have lost my charts. Okay, here we go. Crude oil on a daily. What else can we say about this, Coach Paul?
Well, I want to see what
It is a nice trade.
Oh, all right. Maybe I'm geeking out because I don't have a life. I've done this so long. But seriously, look, all the moving averages are almost they're almost the same price. They're
Yep.
within percentages. So I mean, this is ultimate balance. Out of balance comes imbalance. And while a skunk can't make a cent in this market, I think I'm keeping my eye on this. It won't, it'll break out of this range. So let's look at a trend line from the all-time. There's been different. That's the mean we broke it. Then we got to use the next high now. All right. Now scrunch the chart. Go to the daily. What was the all-time high? Was it 110? Yeah. And
What are we
so
trying to do here?
we used the latest high. All right, just use that. Now it's going to take some time. This could go sideways. What's the end of that trend line? Like next February? So it's in complete balance. And now for it to go 55, it's possible. This is a downtrend. So this is the downtrend line. Now uptrend line. What's the lowest in that? And this will go by and use the. And what do we have?
Burrito pattern here. And Alex says horrible trend line should be based on the latest low. Come on. I am not a trend line expert. I said this multiple times on this show. I am not a trend line expert, but you guys get the idea. And like Coach Hoop just said, they are always up for debate, which is why personally I don't use them. Even though everything's up for debate, I never know where to draw them. But I see what you're looking at here, Coach Paul. We have this Dorito pattern from that low and from this high, and that low was where we went negative. It's telling us exactly what this price action is doing right now, consolidating.
You know, there's a better way than doing the highs like this.
Okay.
Use the line chart.
There you go.
And trend lines are subjective.
100%.
So I believe the best trend lines come from the settlement, because the settlement, and that's what a line chart does. There's no bullshit. It's settled. It's where the real players are, because they're paying margin. So it's like you're gonna, you have to put it. You have to put in more money if you're on the on a gambling table. You ante up. That's what margin does, and that's what reflects the settlement. Now this is a lot cleaner.
Yeah, it is.
And we're going
All the
into
same story. Black hole.
It's there. So on a trend, when we got this way from a trend basis, the trend is down. A longer term trend is up. Pick your poison. It does us no good here, being day traders. Now, the reason we even got to this is that this market is in balance.
And is it? I put on the swing today. I took it off because I had some profit, and this is where I need to turn off my day trader brain, swing trader mode. But I think this is not financial advice. This is just what Jay is doing. There is considerable risk with trading futures, and you should research your own trade setups before you put them on. Anything we say here is for educational purposes only and not for any investment advice. But yes, we are in balance, Coach Paul.
We are in balance in the long term and the short term. So it brings, it doesn't bring great opportunity. Volatility brings great opportunity, but whichever way we break out, it's from that daily, it could be violent because I don't know. But we could take that same thing and do it on a shorter term basis. That's what trend lines are.
Yep.
I really don't use them either. I know very good traders, that's all they use. So
Whatever
goes
helps you
back to
make
this,
sense of the market.
right? It goes back to this, whatever you do, be consistent with it.
Yep.
Where it all goes wrong is if you're not consistent. That one didn't work. I'm just going to change the that's the thing. And Coach
Just draw a
Hoops,
different
their
line until it
own is
works.
it's till I get used it till it works. I keep moving. You can't do that. I used them for a long time, but that was before moving averages, volume data came. I find it much more useful.
Oh, anything else you got before we go, Coach Paul?
Oh,
Get running in a second, but anything else you got?
um, once again, I'm glad we went through this. Um, whatever you're doing in your measurement, be, be consistent. Understand if it has an edge over time, and then you have to be consistent. Don't waver. That leads to plan your trade and trade your plan.
We go.
That's it.
Trade your plan. Shout out to Detroit Pistons legend Grant Hill in the chat. Has anyone else gotten stopped out at the actual bottom tick and top tick? Grant, I've had both of those happen. It is not a great feeling. I had one happen recently. I think I got top ticked on a short S&P. So, yeah, it felt like shit. You hate when that happens, but even if it's measured, oh, that was gold. Yeah, it doesn't feel good. It never feels good. The market is sometimes it's going to do that. But what I will say, Grant, measure your risk. It should hurt only as much as you measured for. Uh, if you're over leveraged, it definitely hurts more, and it's probably not going to be the last time that happens. So, uh, it'll be all right. It'll be all right. All right. Thank you everyone for joining. Thank you, Coach Hoop, for helping us moderate this session. First day of the last quarter of the month or of the year. Uh, first day of October. Good start so far. Trade well, everybody. Manage your risk. We'll see you all tomorrow. Coach Hoop is doing a class in Discord in about 15 minutes. Then Coach Ray and Coach Vince at 6 p.m. and 7 p.m. Central Time. Dakota for slow markets at 7:30. Aaron with the London trade at 1:30, and Deanna with the Euro trade at 4 a.m. I believe Central Time. Thank you, everyone. Talk to you all tomorrow.
Bye.
Bye.